Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is June 11th. I've got Luke Wells with us here today. How's it going, Luke?
It's going good, Mike. I tell you what, too, we got it was 60 degrees this morning.
Yeah.
A little rain, kind of after these 90 and humid. I operate a little better in this this kind of environment here this morning.
You and I both needed a little heat to get some of the crops caught up in our local area here, but honestly,
They are looking good now, eh?
Yeah, they're looking a lot better. A little dreary this morning, nice and rainy. We could use a little bit more of that locally here in southwest Minnesota. So I wanted to just talk to you a little bit today about the hog market, what we're seeing out there. But I first wanted to talk to you about the World Pork Expo last week, Fiesta Day Pig. What was your overall tone from the audience there, and just what did you take from it?
Yeah, the World Pork Expo, I don't have official stats on this, Mike, but attendance from my perspective seemed really, really good.
It was banging.
Yeah, but both days, actually.
Yep.
Usually Thursday gets a little slow, and a lot of people Thursday too, but phenomenal turnout. Had a lot of good topics, a lot of good seminars, a lot of good vendors, right, in the industry. But we're really happy with World Pork. Got to see a lot of clients, friends, industry. We did a new thing this year. We Fiesta Day Pig. We had a big party Wednesday afternoon into the evening, and I just want to thank you. We did that with Marsh McCullen. Thank you very much, Jen, and that team. But thanks to the industry for coming. We had an excellent turnout. It was a ton of fun. The weather was great, and World Pork was it was a 2026 big success.
I had a blast there. It was a good time. So thank you for helping set all that up. But let's talk about the input side just a little bit before we talk about the hogs.
I think that's warranted.
Yeah, we've got some things going on here. We've got a WASDE report today. Hopefully we get a little boring news out of this. At this point, I don't think I've seen anything that is warranted for a yield disruption by any means.
Right.
Weather's been good. Planting pace was fast, so I don't see that changing off trend line there.
We need a big yield, though, right, with this demand structure on corn, right?
Demand keeps up, and that is the one side of the category. You maybe could see some bumps in demand on this report. So maybe watch out for that a little bit, but I think that would be a little expected too. Now, one thing is we have taken a lot off this market. Now, I'll have Cade pull it up maybe on some charts on just December corn here or something, but if you look at these charts, we're at some pretty strong support levels historically on December corn. You're looking at 438 and 3/4 was an all-time low on that contract going back to August of 2024. Many support levels in this 440 to 445 range on this contract going back in history many times. So a lot of support here. Now, seasonal is a different thing. Normally, once we kind of sell off here, any recovery is pretty short-lived, and it pretty much trails off to the middle of August if you look at the seasonals. So you've got a couple different scenarios that could happen, right? You find support here, you pop, which there's three mainly good reasons that could happen, I think, which would be weather. We could get a pop out of weather. It's still dry in Nebraska from the folks I've talked to this morning, for example. If you look at Iran, that conflict is picking back up some steam here, especially over the past 24 hours, so crude oil could go up. And then the last but not least, if China comes in and buys, especially after a bargain buy, pretty good sell-off here, it makes sense. So those three reasons could lead to a little pop in these grain markets. But historically, normally once we're off to a good start, market can't really keep up and we just start to trail off in the middle of August. So we'll see. But one thing it has provided is a pretty good opportunity for the end users, hasn't it?
Yeah, and that's right too. And we go back to 2023, right? That we talk about that, and what was one of the biggest problems when you had $6-7 corn and $100 cost of productions, you just couldn't get the meat price high enough to cover that. So I think it's a good opportunity for an end user. I mean, new crop especially. I mean, that July D spread, right? I mean, you've got a 415 July board, basis dependent, but that puts a lot of corn with a 3. Cash corn starting with it, really works. And, on the U.S.-Iran conflict, you're right, it's going nowhere fast. And the corn market doesn't care about that today. But long term, there will be, in my opinion at least, it'll care about it someday again, right? And so for end users, we still like some options, around this, and I actually don't mind some flat price ownership at, sub 450 D's corn, right? But make sure you keep your hogs covered. It's an opportunity, too, with options, maybe roll some options down, improve your coverage a little bit. Just, use the market volatility to your advantage and defend a cost of production that works. And, then on meal, I think maybe Kate has a chart on that too. I mean, soy crush margins they keep breaking records each week. It's really good. And then that should lead to some nice basis again for next year, just like we had this year on cash meal. But these deferred contracts, they're getting around in that 310 plus or minus a little on the option month. Like that's some pretty good ownership. So just defend your cost of production at these kind of values. They're pretty good historic ownership.
Absolutely. I want to take a look now, just more on let's talk big macro overview. What do you think the consumer looks like today? What's the demand side of this hog market look like? It's being brought into question a little bit here. What do you think?
I think it's the biggest. It's the biggest issue we're facing currently. And the question is it a short term timing thing, or is it going to manifest itself into a little longer term thing? But I think the U.S. consumer is a little stung, Mike. And I think obviously we got some fresh data as you look at inflationary things, and there's a little bit of food inflation, a little bit of services inflation. I mean, but the one that stands out without a doubt is fuel prices, right? We've had an extreme run up in gas prices. That's a direct line to the consumer. I mean, this is like an easy proxy. I got to go. It's been a few years. Like now when you fill up your truck, like some gas stations click you out because you hit $125 or whatever, right? Mm-hmm. I mean, it's just that's a direct cost. And, on top of that, K-shaped economy, all the things like you were into that. And we've got just I'd say a little funk in the consumer here. I think we're feeling that, specifically in the pork industry right now. And, that's the question. Is it a little short-term thing, or is it a little longer-term challenge? And we maintain optimism for the pork complex, and but it's like every day here, it's just a little bit fatigued because we've struggled really since May on pork demand. It's not kind of modeled what it historically would have been relative to the underlying production rates we've been running. So kind of just take a big step up and back, right? We this year so far has been real similar to supply to a year ago, right? So and I guess that is the point. This current market, it's not a supply driven. This is all about demand, right? And when you look at beef price, I think Kate has a graph on choice box beef. Like you can look at that two ways. I mean, the first didn't break 400 or rally above 400, but the way I look at it is it's $400 sub 390 whatever choice box beef.
It's up there.
It's up there, and it's staying up there.
Yeah.
And so the way I signal that is we've maybe hit a price point where the consumer's just crying uncle a little bit. I had a friend text me last night. I mean, we're still buying it. He had a beef rib loin, and it was like $240. He had in his grocery cart. Right next to it, he had a pork loin for $15. Right?
Yeah.
Huge spreads there, right? But still, beef has demand. It's going to continue to have demand. But you take a look at that, and my point is, I think that continues to bode like protein still is in a good spot. The hog industry is still in a good spot. We've got excellent pricing opportunities relative to beef. Protein demand hit our nutrition goals, RFKs, food pyramid, all that. Like nothing like since May is like in my mind like broke. But we do have, I think, a little bit the consumer's got a little cold. Yep. I'm not ready to say it's like flu or blowing out pneumonia, but I think there's some pinch points there. And so when you look at 2026 so far versus 25, similar supply so far. We'll see what the back half of the year does for supply, right? But so far, similar supply. And demand, we would have thought, and the market clearly thought, the market, when we rallied up these over 110 summer futures, thought supply levels would come a little quicker, and what demand would be a little bit better. And year to date, we're about even on demand. I'm going to measure pork demand through pork cutout, best proxy. I think we're 35 cents higher year over year on pork cutout. So yes, it is a little better year to date, but the inflection point is if you take May, June versus a year ago, we're like $3 lower.
Yeah.
I mean, that's May is when it's up. And also you think about Iran conflict, when it started, prices come up, and then there's always a delay on that. You put it on the credit card, you pay it 30 days later, right? And we've just got a little stunned consumer. I'd also say, I mean, this race to compete in this protein market, I mean, it's not just a beef and pork thing. I mean, we have chicken, and I mean, chicken's the highest consumed pounds wise protein in the U.S. and the poultry industry's responded. I think Cade will have another chart on that. I think they're up about 3% year over year. They can grow and they can grow quick. That's the advantage of a shorter life cycle animal like the chicken, right? And then so to kind of take it back and a step up and out, competing proteins, I mean, beef still stays really high. Pork's just stayed flat. These would be wholesale comparisons. And poultry, chicken price is going down. So there's a little more chicken and it's a little cheaper. And it's all kind of competing against this slightly pinched. I don't know if we can, I think the way I described that consumer, and we just, you can look at all the reasons why, but I mean, pork demand's got a little funk right now. It's not responding in the way in which we'd like it to, and the way in which it historically does as we get into these sub 2.4 type production runs, Mike. And that's what the futures market's looking at. That's why we've sold off, and that's why we're kind of where we're at today.
We'll keep an eye on the demand side. Consumer prices or inflation rose 4.2% annually in May. That was the highest in 3 years, Luke.
It's a real thing. So I know we're kind of getting on time, Mike, but I want to we're packing a lot in, right? But that's all right. But so all this, like we still are optimistic pork industry, clearly in the market, system specific productivity is a big differentiator out there. There still is a lot of PRRS around, and if you have PRRS, it's a tough operating environment. PRRS always is a tough operating environment, right? But materially, we don't think the demand structure has went from really good to like horrible. We think it's tweaked. We think we're in a funk here. So we still have optimism. We still are we're friendly December from $74. Okay, like put it out there, the futures curve, right? But we're getting a little fatigued, right? Because the calendar's working against us. It's June 11th. This week, we're going to be slightly above a year ago on harvest. We think the week after, you're almost into July now. So like the calendar's working against us. So if you bring up that CME index chart, Cade, that'd be my last kind of points here for today, right? And again, so, if the summer rally doesn't come, and we're not saying it won't, right? But we are looking a lot more at 2024. Okay, that'd be the red line on that chart. And so 2024 is important for a couple reasons. We've all moved to more cutout-based pricing, right? And that really kind of kicked up in how it feeds into the index in 2024. So we don't have the cash hog chart out there, but since less cash hogs are in it, packers are many times not able to leverage us as bad in Q4. Right. So if we had a cash chart, 23 cash hogs went really low, 24, 25. Also, supply balance, cash hogs to shackles more balanced now. And from what we see from supply and whatnot, we don't see a surge of pigs coming in Q4. So if this year, because demand is a little off, would be our proxy. And cash hog demand, I mean, cash hogs are $98. Cutout's 96 and index is 93, right? I mean, cash is leading the way. So it's not a supply thing. It's a demand thing, in our opinion. If it ends up that we don't get a summer rally, and I would blame that on a consumer issue, a demand issue, I'd also say the silver lining to that is we do think that could be a better on the backside. So every time we rally, and that's the index, but a cutout chart would look the same. When price goes really high, and you can stay here, Cade. Sometimes we can cut a little demand with high price.
Yep.
So if we don't get a summer rally this summer, again, not crying uncle, not saying it's not coming. That should bode for some better prices in the fall. Because again, we think baseline demand is still there, right? So again, that gives us some optimism that we'll get some better hedging opportunities and a better market as we move forward here and keep hammering things out.
All right. Well, thank you for joining us today, Luke. I appreciate it. And please click the link on the description below to get our daily market commentary and other interesting marketing info that you may find on our website as well at professionalagmarketing.com. Thank you for tuning in today. Please hit the subscribe button.